Good afternoon, I'm Brigid and this is Currency Wars. Today, joining me in the trenches is RMB's interest rate derivative specialist, Eerenstein. But first, let's have a look at what's driving the currencies. In the US, there's been a lot of debacle around why the stock exchanges have come off so heavily over the last week, and really it's about the tech heavyweight earnings that have been disappointing the market. However, about 70% of companies reported have beaten expectations, but only 55 have exceeded revenue estimates. And this suggests that earnings are as a result of improved cost cutting and efficiencies. However, this reflects an economic climate which may not be quite as healthy as previously thought. This may make it harder for corporates to justify current valuations, which could see Wall Street turn more consolidative, and the US dollar in turn might find it more difficult to generate fresh gains. But front and centre this week is the South African economic data and the looming Reserve Bank interest rate decision later today. Yesterday's June consumer price index figures came in much lower than expected and was a shock to many in the market. However, the sustainability of this downtrend is challenged by the expected impact that base effects and local droughts may have on food price inflation in the coming months. The lingering fragility of the rand and the ESCOP tariff hikes also are factors to suggest that there's continued upward pressure on the inflation figure. The June consumer price inflation data has given the Reserve Bank an opportunity to delay any rate hike for at least another meeting. And it'll also buy it some time to assess the stances of the Fed and the Bank of England. At the point when hikes from those central banks become a dead certainty, the SARB might be forced to respond with a hike if indeed the rand reflects its inherent vulnerabilities and if inflation by that stage is printing uncomfortably close to the upper limit of the 6% target band. The rand, however, remains within a band ahead of today's interest rate decision, and despite the US stock markets, with the top seen at 1250 and well supported at 1232. Right, now that we know where the lay of the land is, I'm going to have a chat with Andre. Thank you very much for joining me again today. I think it's been a confusing week, right? So we've seen all of this data coming out of the US. We've seen the stock markets come off aggressively. I mean, you're seeing even Asian stock markets today. The only one that seems to be a little bit buoyant is the Europeans, so that, which is surprising. But the dollar hasn't really impacted the rand. So the rand stayed within that range. We still remain relatively fragile. However, we haven't really moved either which way in the last week.
Well, sure. If you look at dollar rand, yes, I think we've been in a very tight range, call it 1237 to 50, call it. And that's kind of where we are. If you look at the crosses though, if you look at euro rand has weakened dramatically. I think we were printing low 1340s. We're back to 1362 now. So there's been a marked deterioration of the euro rand, but dollar rand's been stable.
So the dollar rand's been stable, but that's really been as as the positive data is coming through with regards to reaching some form of bailout package for Greece, etc. And obviously with their earnings data coming out relatively robustly, I think that that's supporting the euro. We're back above that 110 level again. Yep. So that just shows that the market is not completely
well, a lot of bad news was priced into the euro.
Yes, it was.
With euro printing down to 107, a lot of bad news was printed in. And I think that bad news is going to be there for quite some time. I think when you talk about Greece, their debt levels are totally unsustainable. So, a bailout package now, tighter VAT, more austerity, it's not really going to do anything for them to repay the debt. It's just going to be kicked further down the road.
Well, that's exactly kicking the can down the road.
The Greeks and the Europeans have become experts at it. Yeah. And I think it's inevitable that Greece will have to, or the EU will have to write down
some portion of the debt. Agreed. So let's focus. I'm going to bring us back home because that really is the big story for today. The MPC decision. Now, there's been, yesterday's CPI data was such a shock in terms of a lot of people expecting that trajectory back to that 6% in terms of the targets on inflation, a little bit dampened. The market had already priced for the likelihood of a potential 25 basis point hike if we look at the FRAs. But now with that inflation data not printing as high as it was previously, what is your view in terms of the discussions that are probably happening at MPC with regards to the growth? I mean, these are stories that we've had for a while. However, as the last MPC announced, monetary policy is not there to support the economy. That has to come from other areas. So how much will this 25 basis points make a difference? And what do you think the likelihood is that they do in fact hike?
Yeah, it's a tough one today. And I think in any stagflationary environment, and whether we like it or not, we are in a stagflationary environment. It is a very difficult stance in terms of monetary policy. Yes, inflation expectations are a little more elevated than last meeting. Trade-weighted rand is marginally weaker. Spot inflation is something that I don't think the MPC really look at all that much. Yes, it's a baseline for their expectations and for their forecasts, but you know, they can't really do anything about spot inflation. They can only have an impact on inflation expectations.
Well, that's the thing. I mean, we need to be forward-looking, especially if you're in the seat of the MPC, because you can't be, you can't trade in hindsight. You've got to look at what's the likely outcome and how to manage those expectations. So if we look at that, Andre, I think that one of the comments that was interesting for me was, although the inflation figure came in at 4.7, the market was so shocked. Why? Because they actually expected to see that feed through in terms of the inflation trajectory a little bit sooner. And unfortunately, the timing's not great. But I think the general consensus of the market is that we still are in that upward trajectory with regards to the inflation figure.
I think there's one thing that you really need to take into account when you look at yesterday's inflation numbers, is the fact that the pass-through, so headline and core, drifted lower. And that means that the impact of the weakness of the rand has been fairly muted. And I think that's a trend that the SARB really look at, because that has a fundamental bearing on inflation expectations.
Is that not because of the fact that we've seen the commodity prices coming off so dramatically? So you're not seeing that feed through. It's almost offsetting the rand weakness if we look at the oil prices and the petrol prices, etc. But there are those looming issues. I spoke about it earlier in terms of droughts, which can affect food inflation. Going down the line, if the rand continues to weaken, that does pose an upside risk.
No, and I think the SARB have been very vocal in terms of saying what the risks are, and the rand is a big red flag for them. And if there's a marked deterioration of the rand, and not only dollar rand, it's a trade-weighted rand, if there's a marked deterioration of that, then the SARB will have no point but to hike. The thing is, though, what is 25 basis points actually going to do?
This is the
and
thing,
that's something that's a very fine balancing act. So, yes, I think I can see arguments that they keep rates on hold today, and we will have basically our first or next hike going to be in September. I think it's going to give them a lot more time to assess what the Fed's going to do. We'll get more guidance from the Fed this month in any event. I think that there's waiting for them. I think they can afford to wait. I think raising 25 basis points now and keeping things status quo until November, because I think it's what I find is very unlikely is there to be a hike in this month or tomorrow or today, and then again in September. I think that's a very unlikely outcome.
So it's probably more around, do they want to get ahead of the curve and then err on the side of caution in terms of keeping interest rates at a status quo for now. So now we've looked at where we stand. We're going to pull out the big guns and we're going to ask Andre to give us his views on the week ahead. It is a tough one, MPC today. Okay, so we've got the outcome for today. We've got your views in terms of them probably going to, reading into what you said, if you can confirm that they're unlikely to hike today just based on the fact that they probably err on the side of caution. However, there are obviously risks in terms of the rand volatility around that decision.
Yeah.
What is your view with regards to where we see the rand trading and potentially even the euro rand?
Okay, so dollar rand, I think we're going to be fairly bottomish around 12.35. I think we could see a top of 13.70, but that's on the proviso that we break 13.50. If we break 13.50, we will see 13.70. Euro rand, I think, has also been very volatile, and I think that at the 13.40 level, it was very well supported. So I think the range for that was also going to be 13.40, 13.80, and sterling rand has also been exceptionally volatile, and that range I think is going to be 19.10 to 19.80.
So in conclusion, thank you very much, Andre. trading strategy for this week is really just to watch what happens today with MPC. Obviously, if they don't hike interest rates, the rand trajectory in terms of a weakening trend continues, and our specialist today, Andre, looking for the possibility of the MPC deciding not in fact to hike by the 25 basis points, which does put us in that vulnerable position. Looking at a support on the rand at around 12.30, looking up to as high as 12.70 if we break through that 12.50 level, and then both your crosses, euro rand and pound rand, basing at these current levels with the opportunity to to weaken against the rand. So if you're an importer, take advantage of these levels. Exporters, however, hold on to your socks. If you'd like to send any of your questions or comments, you're welcome to do so at CNBC Africa, #CurrencyWars410, or at K-On Capital for your personal responses to the FX markets. Until next week, good luck in the trenches.